welcome everyone. My name is Adrian Sanders. I'm the CEO and co-founder of Chargehound, a automation tool for fighting chargebacks. And I'm also the host of the Payment Innovator series. I have here, my guest here today is Jareau from Finix Payments. Jareau is the Chief Growth Officer. He also has an incredible history in the world of payments. I'm really excited to sort of learn from him and ask questions specifically about the history of payment platforms and how that's emerged and become really a key differentiator sort of in today's world. I think one of the things that we were talking about just offline was how different the world is now, and how platforms really have become essential. So I'm super excited to sort of get into that. A little bit about Jareau. Before joining Finix, he was a commerce and visual search business development lead for Pinterest, and he co-founded Balance, one of the sort of earliest forays, I think, and pioneers of payments APIs companies back in the early 2010s. He was the first employee and head of data acquisition at Milo, a local shopping search engine acquired by eBay in 2010. Jareau, welcome. Super excited to chop it up.
Thank you for having me. Yeah, I'm excited to nerd out on payments a little bit here.
Yeah, me too. Well, let's talk first about, I mentioned kind of like the history of your career sort of as an overview, but I think it's really worth digging into because I feel like it's informed a lot of the way that you think about and write about payments. You call yourself a self-proclaimed recovering engineer. Can you tell us a little bit about that?
Yeah, I think the reason I say recovering is I've never been quite able to get away from it enough to say I'm a former engineer. I don't code really anymore, but I do find that so I studied electrical engineering in college, and it's informed my thinking even about payments specifically. So one of the things when we were setting up our fraud program, and I mean, this is probably near and dear to your heart, Adrian, with chargebacks, but we were setting up some of our fraud programs, and I was trying to explain to folks how we could create a better product experience for good merchants. And I modeled it after like a high pass filter. So like the good merchants would pass through the high pass filter, they would never know it's there. And then all the bad actors would be filtered out by a series of filters. And this is exactly the type of stuff I learned in college and kind of digital signal processing. So I think that's been a current throughout my career, is continuing to think with kind of engineering and also like logic and data-driven models. And then the other piece is I found it, especially like at some place like Pinterest, where I was doing business development. That's what I was hired for. I got pretty quickly put onto product partnerships specifically because you could hand me a contract with red lines and a spec or an API documentation, and I'd be able to like look at both of them and kind of that same night tell you, plus or minus, 10, 20% if this thing could actually be done as a partnership.
Yeah, I love that. I think that something I think about a lot, my co-founder Dimitri is our CTO, and we talk a lot about how Dimitri's job is just to tell me no a lot of times.
Like it can't be done.
Well, or just like, why do you want to do this? And I'm like, oh, well, it's really exciting. He's like, well, I want you to really think procedurally through why you want to do this. And then I'm like, oh yeah, that doesn't make sense. I feel like engineering is that, right? It's you have that experience of things not working, right? And it's extremely, you work on something and then it doesn't work. And so you understand why something won't work. And I actually think that really helps in BD, because BD is all about aspirations, right? You get into the meeting room or the proposal and you're like, we're going to do all this cool stuff together. It's going to be amazing. But no one is really thinking about, okay, but we're technology companies. How does this actually, work? What does the plumbing look like or whatever? So yeah, I love that idea that being an engineer and having that experience actually really made you a great BD person too. And just,
honestly, I think the contracts are really just like logical sequences written down in legalese instead of code, and so they're I think they're quite similar. And then also in the world of partnerships, if you come at it from like an engineering kind of API first approach, like almost all partnerships should be driven by APIs, like at some level, right? So, I mean, especially this world of embedded fintech, embedded payments, which Finix plays in now, that I think that's kind of at the core of that thesis is there's a lot of these kind of like, whether it's payments or lending or insurance or issuing or payroll. And the idea is like these APIs can be embedded into different software platforms. Like that's kind of the high art of what a partnership looks like. Like you
Yeah.
have software and kind of OAuth protocols doing the kind of signing and identity sharing, and then you're off to the races without a ton of human involvement or one-off specific project. So yeah, I've kind of always thought of those as similar, and I think you do need both also to build good product.
I think that that's a super interesting point, and I hadn't really thought about it this way before. But effectively, consensus, BD is about
Mm.
consensus. It's like, okay,
Mm-hmm.
we agree to do this together, but what this doing this together is gets super vague if it's not built on top of technology. Because
Yeah,
if it's
and
built on top of an API, like the consensus is very explicit. It's like, did you get this request or not? Right?
yeah,
Did
it's
you
like
post or
this is
not?
an optional field. This is a mandatory field. Did you pass the
Yeah.
mandatory field,
Yeah.
right?
Did you pass it? No. Cool.
Then we
Like,
can't move forward. No,
exactly.
that's exactly right. That's exactly right.
Yeah. So that's really, I think that's interesting. And I also think that at least what I've noticed, in my more limited career in payments is that that really is a cultural dynamic between those two sort of ways of thinking. It's sort of this old school, hey, we're going to talk it out and kind of figure it out in a meeting versus like, hey, we have an API, let me know if you can use it, or we're looking at your API, we're going to use it in this way, is that cool? And it's like, yeah, if you can use it, you can use it, right? And Chargehound was really built on that, right? Like when we integrated with Braintree and Stripe and PayPal and things
Mm-hmm.
like that, connecting into APIs means that we're playing by the rules the way that it's intended to, we're rendering services that it was intended, and the consensus doesn't require so much overhead, right?
Yep. Yep. Yeah.
So
And one last thing on this, I saw the kind of the opposite of this, where my first job in Silicon Valley, I worked at an e-commerce company called Milo. It was later bought by eBay, but I was the head of data acquisition. Really, I was like some combination of product manager and engineer. So I was writing scripts in Python to scrape retailer websites. And so that was a world where we were going out of this like consensus interface where we weren't using an API. We were basically using CSS parameters and HTML classes to reverse
kind
engineer
of,
what,
yeah,
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 basically to reverse engineer what the API would look like. And that was my job, was to build those scrapers and maintain them. And, things would break all the time, and there would be like what we called it bit rot, and things would
yeah.
just like regress and you have to go and update it. So that's not how partnerships are supposed to be. And we were also doing that in a little bit of a permissionless way. This is, I mean, back in 2009, before I think the modern RESTful
Totally.
concepts were widely adopted. So in kind of a course, that's what we were doing. But yeah, I think I've seen like full circle on this now.
Interesting. Well, let's talk about that. Let's talk a bit about payment platforms and, specifically your journey from
Yeah.
Balance, kind of like I said, the pioneer of this way of thinking, now to Finix, which is sort of breaking ground in its own ways. Tell me a little bit about that. Like, you've seen it from then to now. What's changed from life? I think the primarily thing I'm interested in off the top of my head is just from an adoption perspective. It just
Mm.
seems like more companies are amenable to this now in a way that, in the past, it just there wasn't an appetite for it.
Yeah. I mean, so to give the kind of background, like Balance was a company that we focus on payments for marketplaces. That's how we build ourselves. Finix, on the other hand, we call ourselves a payments infrastructure provider for platforms.
Mm,
And so the keywords here are platforms and marketplace. But the idea across what you call it is there's the need for software companies or fintech companies to charge customers, hold money, and disperse money to what we call submerchants, right? And
right.
so the model, whether you're a marketplace, a vertically focused SaaS company, a fintech platform, on and on and on, the models are very much the same. There's some differences in terms of like maybe how long you need to hold the time. I should also mention crowdfunding platforms are a big part of
Sure.
this as well. And so, yeah, like in terms of what's changed, like, I mean, I appreciate you
Everything.
calling us a pioneer, but like there wasn't a concept of this at the time. So I'll give you the quick background on Balance. So I was at this company, Milo. that's when I was entertaining my dreams of becoming a professional soccer player.
Sure.
But my roommates also worked at Milo at the time, and they were starting this payments company together. And so um, on nights and weekends, I kept like working with them, and I was like losing sleep thinking about it. It was essentially at the time of Venmo competitor,
Right.
right? This is before Cash App had come around. This was like, Venmo was like the only thing out there, and they're building a Venmo competitor. And in their mind, they thought, well, there must be a tool. Maybe it's PayPal, maybe it's something else, where we can just like grab some APIs and plug into them and be able to send money out and charge money and do everything in between. There wasn't, right? And so a lot of people, I think, were like, oh, Stripe has Stripe Connect. Stripe was called Dev/Payments at the time. They were 6 months ahead of us in YC. We were one of their very first customers, and there was just no concept of platform payments. So
Yeah.
we saw the opportunity and we built it. So I joined up with them about a month after they got out of YC, and that's when we started building what then became Balance. And so yeah, it was
Very different world.
it was like very different world. And even people are like, how did you get into fintech? Sometimes that's the question I get. It's like there was no like getting into fintech. We were like, a startup and we were a tech company, but there wasn't like a big rush of money going into fintech companies.
Yeah.
In fact, one of the biggest cautionary tales was this company called OboPay, and they went through and spent millions of dollars getting all their licenses and racking up investment, and then no one used the product.
Yeah.
And so we were like, that was like the cautionary tale that I think cooled the market out. And this was the late 2000s. And so we were like, just on the other end of that, where we were like starting up fresh. So it was just a very different world then.
I that's so funny that you say that, because I mean, now it's so funny. I don't feel like I'm the old guard of tech, but now that it's like, I guess, but now I'm meeting like entrepreneurs now and founders and hackers or whatever, who are like, they're asking me about my experience, and they're like, I'm describing payment stuff that like our team built, and they're like, well, why didn't you just use Stripe's blah for this, or
Exactly
blah for that? And I'm like, none of that stuff existed like even 5 years ago, right? Like,
or like Plaid. People are like, oh, you just use Plaid. Like, I
yeah,
was like, we had to do micro deposits in the
yeah,
bank accounts, right?
yeah, exactly. Like you had to pray that Yodely was working or whatever,
Yeah,
or
Yodely,
like
exactly.
let it scale or whatever.
But
So,
I will say at the same time, there's a bunch of stuff that we were thinking about at Balance that is, I think, not even quite yet, hasn't made its way all the way to the market. So, I mean,
interesting.
like, so for example, things like we were one of the first to introduce this push to card technology. So the ability to instantly get funds via a debit card or credit card now, but that's available places. It costs 1.5% often, so it's a pretty expensive product. I don't think there's been the adoption to kind of like compete that price down.
Yeah,
Same day ACH is a disbursement method for
yeah,
platforms. Like that's not widely available yet. Like some people have it, some people don't. Like WePay offers it on Chase because they're owned by Chase now. But it's not like Stripe has like I think a 2 to 3 day
yeah.
disbursement window. So there's even a lot of things that we could be advanced on that we're not, and so it has been interesting though to see the progression and migration. One of the very first things I saw is this build versus buy mentality, and I think that is shifting to kind of what we were talking about yesterday and even earlier today. Is like it's now very common to consume anything via API.
Yep.
Right. I remember when we were working at Milo, we had like an actual like server closet that was like 1,000 degrees because
So
we were
funny.
just getting
Yeah.
onto AWS and we still had some stuff running on there. But now like payments, payroll, insurance, like anything you can get via API. And I think that's transformational for the whole industry.
Yeah. So talk to me a bit about this. This idea that the APIs, the APIs are the answer. I totally understand that from like the sort of, the Stripe perspective has always been like, you're a hacker, you want to boot up a small company, you want to accept credit cards online, use our APIs, get going quickly, et cetera.
Yep.
But Finex's play is platforms, right? And typically I would say platforms are larger than mom and pop sort of hackers, though I'm sure there are platforms that are emerging like that. But for those orgs that are that large, like what is it about this build versus buy scenario? Why wouldn't they roll their own platform in-house and own all that stuff?
So I think there's two things. One, as you rightfully call out, like, and I will keep banging this drum until people listen to me. I think there's a very, very large difference between a merchant and a platform, right?
Absolutely. I believe
And
that
and
100%.
and, and where it shows up is like you can have actually a number of customers we work with either at Balance or now at Finix, like they are relatively small by headcount, right? But they're moving hundreds of millions of dollars,
Yep.
and then you get into the billions of dollars. And so the big difference there is that the amount of um, like operations or activities that you have to do if you're a merchant are like n of one. So like
Right.
you get one settlement a day. You have n chargebacks a month. You have you know no merchant onboarding requirements. When you become a platform and you're actually processing payments on behalf of someone else, you have an order of magnitude more transactions. That seems straightforward, right? But then you also on the back end have you know settlements out to n
Yes.
hundreds, thousands, dozens, whatever it might be of sub merchants. So APIs and software generally come in to help automate that, because to reconcile your books as a large platform moving billions of dollars a year with thousands of kind of entities, either on the payer side or the payout side, that's an enormous undertaking.
Yeah.
And so I think that's where some of the build versus buy comes into, is that it's worth it for you to pay someone else who does this as a matter of business. And just like you pay AWS to be highly secure, highly available, all those things, you pay Finix to be penny perfect on reconciliation and always on time on payouts and high availability on transaction processing.
Yeah.
Um, and so then we allow you to do the things that are special to you, which is like build a unique value prop to acquire more customers, to delight your customers so they stay longer and your LTV goes up.
Yeah, I think this is a really interesting distinction, and I know you're saying like you'll beat this drum, and but I think you're right, and I think it is interesting because again, the thing that I think shocks people is just the scale of online payments. I mean, it's shocking to me even, right? And we're a technology company and we
Yep.
deal in automation, but it is just that, and I think it's like this sort of description that you use about how platforms are not, just end customers or end chargebacks. A friend of mine, Daniel Nelson, who used to be at PayPal, talks a lot about the goal for us as like merchant support, as vendors providing tooling,
Mm-hmm.
should be in the future and today to reduce operational complexity for merchants,
Mm-hmm. Mm-hmm.
and that at all costs, that is kind of the next frontier in some ways for merchants, for us as vendors to sort of
Yep.
support them. And I really love this because it is this thing of like, oh, you thought you had a handle on chargebacks, you were a small platform, and now you're opening up an EMEA. It's like, here you go.
Yep.
Oh, you're launching
Yep.
a new line of products, or you're introducing new offerings. It's like, it's not about just transacting the credit cards. It's not an SKU, right?
Yep.
And so I think that even if you're a payments veteran, just the world of online things transacting online is just, it's completely different, right?
Yeah.
So
No, it's enormous, and I think, what we believe at Finix is the way that those merchants will be served. Because let's be honest, there's been this like transformation, this revolution on the consumer side. Like if you have Apple Pay, Cash App, Venmo, even like just swiping a credit card and like the browser keeping your credentials, like there's a lot of things that have gotten way, way better on the consumer side. I think as you're hinting at, like the merchant experience needs to get a lot better. And the way that we at Finix think this is going to happen is through vertically focused software companies. So these are SaaS companies that are narrowly focused on one niche. It could be like pool cleaning, field service management, right? Like
yeah.
veterinary care practice management. Like there's like an infinite number of these niches and verticals, and they build an amazing SaaS experience for them, and then they layer in financial services. We think that that's the way that not only the payments experience, but the overall experience gets better for these merchants.
So that's an interesting point, and it resonates with me that kind of the expectation then for differentiation is like your domain expertise. Like you said, you're the best pool cleaning booking platform on the, I mean, hey, I bet that is a real difference.
No, these are real things. These are real things.
I believe it 100%. But then, talk to me a bit about this idea that all companies will be fintech companies, right? How does that sort of play with this idea that but then you guys are that backbone or whatever? Like, does those Pools R Us or whatever this company, do they end up ingesting and building their own payments flow, or is this that Finix is just like that partner for the long haul?
I mean, definitely for the long haul. So there's kind of three ways to answer this. And one is on the front end, kind of going back to this build versus buy. If you're a SaaS company, you are most likely using a web service technology. You're using Google, Amazon, Azure, whatever it might be. And so this concept of like outsourcing critical pieces of your functionality that you still have granular control over so that you can focus on efficiencies, cost saving, and what you're good at, what you're unique at, which is attracting and delivering value to these customers. It's the same thing in payments. And so the cautionary tales for me are always like companies like Uber and Airbnb. And we got a little bit of a peek inside the early payments operations at Airbnb. Brian Chesky, the CEO, was an investor in Balance. And so they were always, one step ahead of what we could deliver at the time. But like both of these companies, Uber and Airbnb, have delivered, massive value, but at the cost of hundreds literally of engineers just focus on payments.
Right.
Just focus on payments in all the regions that they're available in. And so most SaaS companies that are coming up now, especially vertically focused ones, are probably not going to do that. And part of it is because there's a little bit of this, like what we call the vertical SaaS conundrum. So to succeed in this ever kind of like increasingly competitive SaaS market, and if you look at the multiples and the overall like enterprise value of just publicly traded SaaS companies, it's like through the roof. It's enormous, and it doesn't look like it's going to stop. If you look within vertical SaaS companies in particular, those companies have 10x'd over the last 10 years, right? So hugely valuable companies like Toast, ServiceTitan, big players, but they all face this conundrum, which is by going more narrow so that you can compete for and delight your customers, you actually kind of constrain the TAM, so your total addressable market.
Yep.
And this is where the embedded kind of payments, embedded finance comes in, is that the answer is to start with payments, usually because that's the backbone of almost all financial services, is money in and out, to sometimes double, triple your addressable revenue and market, and then also keep customers in stickier. So you get better revenue, less churn, and you create a better user experience for your customers, right? And so that's why we think this is such a big trend, is that you're taking digital payments, which is this massive transformation that's happening, and the SaaS transformation, like kind of the digital cloud transformation, and you're merging them together. And I think this is, I mean, it sounds like hyperbole, but I think this is like the biggest like economic transformation that's ever occurred, definitely in kind of the modern era.
Right.
And so that's Finix plays at the exact center of that. And we've had, tremendous growth to date, and we don't see this slowing down anytime soon.
That's super fascinating. So you're feeling like this is the biggest. That's a bold claim, right? That this is,
well,
crypto, whatever crypto, this is it, right?
I really do. So Matt Harris, who is a investor at Bain and one of our board members, he led our Series A. He talks about this being the fourth platform, so embedded fintech broadly, and he lists the other three platforms that are out there. So there's like cloud, there's mobile, and there's SaaS. Cloud, internet, and mobile. And he sees embedded fintech as being bigger than all three of those combined. Also, if you just look at what's going on, just in not even vertically focused payments companies, but horizontal, you have Stripe, which is over $100 billion company, Adyen, which is $80 billion company, Checkout.com, Molly just raised a massive round, a couple $1 billion. Rapid is a $5 billion company. Like there are many of these huge companies out there, and we think there's that is supported by this massive market.
Yeah, I definitely believe that. I mean, the market certainly does. So
yeah. Well, PayPal says they have $110 trillion TAM, so that's pretty big numbers as well.
I'm bullish on PayPal. I feel like PayPal's has some good ideas. The last couple of things I want to kind of talk about is in the world of fintech is your thoughts on some of the trends. So obviously we were talking about how platforms and fintech in general going to eclipse everything in the business world, or be the backbone, or however you want to look at it. Do you think that that some of these opportunities that we see that have been accelerated by the pandemic, just people buying online more, do you see any backlash to that, or do you think that consumers will continue to just push and push for more of these sort of more sophisticated experiences from merchants and
Yeah,
from payment platforms?
I think I think yes. I think the expectations have definitely risen. I mean, the simple use cases like someone like my mom who's never done like online grocery shopping before. Once you start that, like you see convenience, and my mom is getting into her 70s. Like I could see that becoming a more and more prevalent use case for her. And for myself, like I go to coffee shops a lot. I stop going inside. I do curbside pickup. Sometimes it's more convenient, especially when I have a toddler in the back seat, is just continue to get that curbside pickup. So this kind of acceleration, or even just transformation from what might be a in-person transaction to a digital transaction, I think a lot of that is here to stay.
All right, you heard it here first. No, I totally agree with this. I also love curbside pickup with my children in the car.
Exactly, exactly.
So I'm a big fan of that. I think that one thing I'm looking forward to seeing more from companies like Finix is sort of and I talked a bit about this with Archie Puri from Galileo a few weeks back,
Mhm.
is how the scale of technology that companies like yours are offering. What are some emergent and new experiences that are being developed that you guys are seeing that might even be sort of serendipitous?
Mm,
So obviously you guys enable a lot of stuff similar to how like Instagram created this whole new market of like marketing and influencers and different business types. Are you guys seeing anything there that's particularly interesting or exciting that you can share?
I mean, one thing is I hope that with embedded payments and embedded finance generally, like there are more SaaS companies that can start that otherwise may not have been economically viable. Like one of our big tenants that runs through the entire company, like what we write about, how we build a product, what we talk about, is access. We truly want to bring more people onto like this accessible financial service ecosystem, and we are focusing on platforms because we think that's the future of how to do that. If a platform that's focused on, I don't know, like I'm trying to think of the most niche, obscure thing possible, but like um, golf cart repairmen is like viable now because they know they can get double the revenue that they would otherwise get from a SaaS fee. Like that's fantastic. That not only brings that entrepreneur and that SaaS platform online, but then hundreds, thousands, millions eventually of people who can earn funds through this. Like one personal story I'll share is um, my sister is a DIY influencer on Instagram. And so that is the platform that offers her the access to distribution,
Yeah,
right? And so she's now able to earn money from home while taking care of her two kids in a way that she just wasn't able to before Instagram was around, right?
totally.
And on the back end, she tells me about like her payments experience where she has to go to this like publishing company who uses some
Yeah,
outdated
it's
software
like
and
a
is just like
nightmare.
fax
Yeah,
in some information and then wait till the end of the quarter for them to cut the check. Like you can imagine if people are living paycheck to paycheck, which luckily my sister is not, but like that's not viable, right? And
yeah.
so with better payments infrastructure, faster money movement, cheaper costs, more distribution, and more scale, you can actually start to bring people onto the economy that they may not have had a viable path to before. Personally, to me, as someone who grew up on like food stamps and welfare and is now able to help create this type of technology, that's like really inspiring to me and exciting to me. But that's the goal, is like we want to get more people on the financial service ecosystem.
More money, higher velocity money is better for entrepreneurs. It's better for people who make money, and they get more of it in their pocket. I think that's a pretty worthy goal to aspire to for
Yep,
sure.
exactly.
Awesome. Is there anything else you want to share with the people out there?
um I'm trying to think if there's anything that we missed that. Oh, I had a third point that I never got to about kind of platform payments. I think one of the exciting things, so we talked about the build versus buy and then the kind of experience that you can unlock, specifically for a vertical SaaS company. So the better pricing, lower churn, better customer experience. We also think there's a value in becoming the system of record. So um, we see examples where we have customer of ours who basically rebuild their databases based on our API, periodically, once a month, once a quarter. And so we take that as a sign that we're providing tremendous value, and also like this rock solid reconciliation and ledgering that allows them to be much more confident in their flow of funds and their money. We know that our technology helps them cut down on like net payment terms with what would otherwise be a vendor. They're now just someone else in the flow of funds that they can do a split payment with. And so I think on the back end, you asked about these emerging properties, like I think those types of business operations are made better by having a third-party API that you rely on more than your own system, and that smooths out the flow of funds so that you can just get on with your business rather than worrying about chasing down some net 30-day invoice that you need to get paid.
I think that to me is like one of the most powerful things. And again, this is like putting on my sort of like founder hat, right? Is just that, I mean, and you know this, right? Is like just doing your books at the end of every month and then looking forward is a process that should be done by computers, right?
Yeah. And literally the machines that are good at math and ledgers.
I'm like, why am I doing this, right? Why are we doing this as a team? And the way to think about forecasting even, right? Like, obviously you always need to know where your ship is going and like sort of have a sense for the horizon. But like this idea that, you could actually be partnered into infrastructure that not only helps you predict that sort of stuff, but feels confident enough to provide you a loan or invest or whatever, right? In these ways that, obviously with like Silicon Valley Bank, they've led the way, right, in a lot of ways with these sort of instruments. But I mean, it makes so much sense, right?
Absolutely.
So because like kind of what we said at the top of the hour was just that it's about consensus, right? It's about what do we agree that this is where we're trying to go, but then do we also agree that this is where we're at, right? And if your money flows through APIs, right, you have a much better, you're going to get to that consensus so much faster, right?
I mean, yeah, I mean, I could nerd out on this, but like literally we're seeing funds flows where like there's this whole world that would otherwise happen where like someone would have to cut an invoice to someone, they'd have to wait for a check, they'd have to like dispute it if that was the case, they'd have to go back to their books and like close it out, mark it as paid. This literally happens with like an API call that says send this much money to this account, and that's it. It's done. I think that's amazing. That saves literally like 3 people from having to do manual work.
Yes, we're big fans of that at Chargehound. That's what we do with this.
We're replacing fax machines with APIs.
Yes, exactly. Awesome. Well, Jareau, this has been super rad. It's been really informative for me, kind of just hearing it from that perspective, from this macro platform perspective. I tell people this all the time. At Chargehound, we're such a small little sliver of the payments world. And so I'm like, does our learning, our insight, does it apply to this macro? And also, what can we learn from innovators sort of who see much more of the space? So super informative and helpful for me even. So thank you so much for sharing.
Yeah, thank you for having us.
Cool. All right. Thanks everybody for tuning in. We'll be back with more updates about the next installment of Payment Innovators on our LinkedIn, on our website, and all that good stuff.